Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, December the 13th, 2012. We'll be looking at the S&P 500 Large Cap Index, the longer term chart here to kind of show you something going on right here. Looking at the S&P 500, like I told you guys in yesterday's video, I can't tell you what's going to happen in the short term ahead of the fiscal cliff, so that I'm just a blind spot for me. My analysis wouldn't be any better than yours because every signal could be bogus on either direction because we don't know when they're actually going to make a deal. However, longer term, we can look at the picture and say we know a deal will eventually be solved, and of course we still have fourth quarter earnings. So I still have a bullish bias from a fundamental perspective, at least what's going to be macroeconomics and moving the market forward. Right now, looking at the S&P, we've been talked about this before. You can see that there's what appears to be a very large head and shoulders pattern potentially forming here, which would be looking for a peak here would make a lot of sense because we saw the peak in the previous shoulder. This is the first shoulder. This is the head formation. The second shoulder typically peaks out at the level of the previous. Not always. You can have them cattywampus, but in most cases, like you have back here, you had to move up here, pulls back, then a move up here, pulls back, and then a move again, and we roll over. Typically about the same level for the shoulders, but the head sticks out above the rest of them. And that's what we're looking at here is potentially happening. However, there's a problem. In this particular case here, I can look around the globe and find sell signals. In this particular case here, I only find the sell signals in the U.S. markets. We don't see them in Europe. In fact, we're getting very bullish longer-term signals there. So that's a problem. Another item that I want to point out here is that you've pulled back here very shallow comparative to what I like to see. Typically on a head and shoulders pattern, you'll see an increase on sell volume on this side of the head compared to the previous shoulder. You didn't see that, and you know that for multiple reasons. You could look at the volume chart here, or you could look at the low point here, and then the low point here. Still substantially drifting higher. That's not a very good neckline to draw there. That wouldn't be a very good sell signal there. I'd like a little less slope, more like this, or actually even sloping down in some cases would be nice. We saw that on some of the charts on the this time period on some of the other U.S. charts. But in this particular case, none of the U.S. charts gave us lower lows. So we don't even have a strong signal here, and it's not being confirmed by the global markets. In fact, they're confirming the bullish signals. So let's look at this another way. Let's ask ourselves, can this be a bullish signal? And that's always possible. So let's see. We have this move to the upside, this pull back here, higher series of highs, higher series of lows. There's continuing this overall pattern. Now, where do we go from here? We're just kind of stalled right there watching the middle Bollinger Band line. Right now, I'd say continue to look for this to continue to move to the upside because the overall trend, the longer term trend, is still up. I don't see any reason to alter that. One last item I'd like to draw your attention to regarding the potential head and shoulders formation that a lot of people are looking at here. Whenever you're looking at those, they're easier to gauge when you're further away from the 50-period moving average. In this particular case, you can see how far the head was from the 50-period moving average, and even the shoulder here when it peaked out from this point. In this case, look at the 50-period moving average. It's right here. That's an important piece of the puzzle because typically when you pull back to that point, that's where you're going to find your bullish opportunities in an uptrend. So the idea that, oh, we're overextended at this point is not accurate. We're not actually overextended. We need to be away from that 50-period moving average to be actually overextended. To do that in this particular case would give us a higher series of highs. Take a quick glance here at the Russell 2000 Small Cap Index. Again, the same long-term chart. 2 years weekly candlestick. This candlestick right here has not finished forming. I do recognize that you're seeing that as a shooting star, but the day is not over, and nor is the, I should say the day is over, but the week's not over, so this candlestick hasn't finished forming. And on top of that, I want to point out that again and again and again, we've seen these shooting stars have failed this time around on the global markets, and that's important to note because the markets are telling you there's strong buy pressure and a good bullish move going on. So this is important to think about. Again, we had the same overall short-term condition here. You got this move here, higher high here, and then we come up here and it looks like we might be peaking out roughly the same level that we did in the previous shoulder. So that's something people are looking at here again. But again, I point out all the same details. You are not overextended away from the 50-period moving average. You're at the middle Bollinger Band line here. You're not overextended on the ultimate oscillator, and just because you hit that 70 line doesn't necessarily mean it's peak. You can oftentimes hit it, bounce away from it, and start moving up there again and again and again before you actually do peak. So we're not even there yet. So I really don't see a good argument here for this being a true head and shoulders formation. Quick glance here at the NASDAQ, another one that's very clearly defined here. You can see the previous one at a high point here, pulls back to this point, bounces higher, pulls back to this point, bounces again, and peaking out roughly the same level you've seen before, and then rolling over here. Notice the distance from this point here from the 50-period moving average, and notice also the negative slope between the neckline there. It was sloping down. It was indicating that we had seen more sell pressure on this side of the actual head formation that we had seen on this side of the shoulder, indicating that sell pressure was increasing. That's what rolls the market over. In this particular case, you don't have that. Neckline would be here. So you have this first shoulder formation, pulls back, head shot, pulls back, and then we start to form the second shoulder. Note the neckline would be drawn in a bullish upward slope. That would be less bearish. Even if it were accurate and we were to roll over, it'd still be less bearish. And again, you are trading at the 50-period moving average, not where you want to be looking for a peak. And also, you'll be looking for actual move to this level here to actually say, oh, it would probably have a head and shoulders formation. You're not even there yet. 59, 55 on the ultimate oscillator, again, not overbought. I think what we're seeing in the short-term markets are a lot of false signals, and I think those are caused because of the fiscal cliff, and you see people afraid of that. And that's why I'm telling you guys, like I pointed out in yesterday's video, look past the fiscal cliff. Think about what's coming after it. Nobody can tell you what's going to happen and when that deal is going to be made, whether it's ahead of the deadline or before or afterwards. But we know that the deal will be made, and we know that the fourth quarter earnings, best earnings of the year, are thereafter. So I wouldn't be confident on the short side here. So I would, again, recommend that if you're not willing to sit through the turmoil that could happen to the market prices going into the or near the deadline for the fiscal cliff, then just get out and wait for the smoke to clear. For those of you who can look past it, then think a little bit more mid-term as opposed to real short-term, and anticipate this market's probably going higher. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.